All right, hello everyone, and welcome to this new video in our series on Bitcoin on-chain analysis and valuation. So I'm your host, Bitmaniac. In this video, we're looking at exchanges from an on-chain perspective, and we're going to see what kind of metrics are available to us and how we can read those metrics. Looking at the balance on exchanges and looking at the flows in and out is really a useful way to get a sense for short-term and medium-term price movements, and it's also a great way to get a pulse on the market. So one on-chain metric that is very popular is balance on exchanges. It's exactly what you think it is. We're talking about the aggregate amount of coins currently held on addresses which are known to belong to exchanges. So why do people care about this? Well, simply because it's a good sentiment indicator. Typically, if you're a long-term holder and you don't plan to sell your coins, then you would take your coins off an exchange and put it in cold storage somewhere. It's much safer. We all know that exchanges can get hacked. But then if you're planning on selling or you want to sell immediately, then you would send your coins to an exchange and get the transaction done there. So overall, less coins sitting on exchanges means that the market is more bullish in general. And so you hear people talk about sat squeeze on Twitter and elsewhere, and that really describes this kind of hypothetical situation whereby there's a shortage of coins available to buy on exchanges, and that is considered very bullish. So let's have a look at how all of this plays out and if we agree or not. Here I've opened Glassnode. I've pulled up a chart called balance on exchanges. And what you have here in orange is the total balance on exchanges since 2014. And this is denominated in BTC. And the black line in the background is the Bitcoin price, as we usually do. So what do we see? Well, we notice that the balance on exchanges has been going up since 2014. There's been a few blips here and there on the way, but overall, more and more Bitcoin are being stored on exchanges from 2014 all the way to March 2020. And at the peak in March 2020, you see that there's about 3 million Bitcoin sitting in exchanges. So in March 2020, when COVID kicked off, something happened in the market and that long-term trend broke down and coins started to flow out of exchanges at a pretty fast pace. And this continued for about 12 months. So from March 2020 to March 2021, we had these really large sustained outflows. And that really captured everyone's attention and imagination. So that's where the concept of a sat squeeze came about. And it started becoming a meme. And it was widely regarded to be a super mega bullish signal. Now, there's a minor issue here when we're looking at this data. We're looking at everything in absolute terms. And however, we know that the supply of Bitcoin increases with time due to mining, due to the inflation in the system. And so we want to be really rigorous and we want to look at the percentage of existing supply that is kept on exchanges, just to make sure that it's telling the same story. Now, Glassnode conveniently has a report called percent balance on exchanges, which looks at precisely that. So it looks like this exchange percent balance on exchanges peaked at about 16% in March 2020, and then it went down to a low of about 13%. So I have to admit that this actually came to a surprise for me. What this says is that only 13% of coins right now are kept on exchanges, and that means that the overwhelming majority, right, so the 87% other coins are not on exchanges. And I think that's a really good thing in terms of, overall network resilience and self-sovereignty. It's also a good reminder to you watching this video that if you haven't moved your coins off an exchange, you should really consider doing it ASAP. Now back to the sat squeeze discussion. So we were looking at this trend and we were wondering if it's really a thing or if it's a bit exaggerated. So it turns out we can go a step further and look at this data broken down by exchanges. And so you'll notice that if overall there's an outflow of coins from exchanges, right, from March 2020 onwards, there also seems to be a different story by exchange. So you can see here that Coinbase is in blue, and it has by far the biggest stash of Bitcoin. Coinbase really has seen the biggest drop in overall balance. You could see that here. It's really been dropping since early 2021. We know that Coinbase is a big US exchange. It's popular with retail buyers, but we also know that Coinbase has become very popular. It has become a very popular venue for US institutional buyers who are looking to get exposure to Bitcoin. We've heard that MicroStrategy and Tesla both did their massive buys through Coinbase. And so this exodus of coins off Coinbase seems to play into this overall narrative that there's been a lot of US institutional demand in 2020. And then you see the second biggest is Binance. You can see here in green. And Binance has a very different profile. So Binance is more international. It has a very strong retail focus. It's also more of an altcoin trading focused venue. So a lot of people use Binance to trade alts and other shitcoins. And so one narrative that's been floating around is that the increased balance of Bitcoin on Binance is basically due to Bitcoin holders who are sending their coins to Binance in order to sell those coins and diversify into alts to benefit from all the pump and excitement of the alt season. So basically looking at this data by exchange can help us understand where the demand is coming from geographically, but also the profile of buyers. Are they retail? Are they institutional? And so on. So I want to go back to our initial chart. And again, here we're looking at the total balance on exchanges denominated in Bitcoin. So that's important, denominated in Bitcoin. And I want to touch on this whole SAT squeeze concept. So I admit getting caught up in the excitement and tweeting about this. But if you look at it rationally, and if you denominate this graph in USD terms, you actually get a completely different picture. So this is this same chart. So the same chart, but denominated in US dollars. And because the price of Bitcoin has really appreciated so much during those 12 months, that window from March 2020 to March 2021, well, the dollar value of Bitcoin held on exchanges has really exploded. So it's about 20 billion at the start of this 12-month period, and now closer to 140 billion. So it's gone up 7 times. And so in my view, this completely invalidates the SAT squeeze narrative, sadly. There's a lot of Bitcoin in dollar terms that are sitting on exchanges right now. And that's really what matters. Newbies that come into the market, they want to allocate a dollar amount. They come in and they say, I want to buy $100 or $1,000 of Bitcoin. That's how they would think about it. And from that perspective, exchanges are not running out of Bitcoin to sell to buyers. Actually, they have records amount of Bitcoin to sell. So technically speaking, I think the SAT squeeze is more of a meme than the result of solid on-chain analysis. So let's move on to a different group of indicators, which this time relate to the flows in and the flows out of exchanges. So tracking these flows in and out of exchanges is quite insightful and can give you a pulse on the market. It's something that's widely used by traders. So I've opened up a new chart here on Glassnode. It's called Daily Transfer Volume to Exchange. And it shows how many Bitcoin flow into exchanges every single day. So Bitcoin going into exchanges. So that's the orange line, and in the black you have the Bitcoin price. So we notice that this inflow volume tends to oscillate around 50,000 Bitcoins per day. And that's quite substantial. At today's valuation, that's about $2 billion worth of Bitcoin that's being sent to exchanges every single day. And this is $2 billion worth of Bitcoin that's likely to be sent to exchanges to get sold off, right? So it gives you an idea of the amount of liquidity that's in the market at any time. And it's useful to have that number in mind when comparing other flows in general and trying to understand, what's meaningful and what's not meaningful, what's quite small. For example, when we're talking about miners, and we'll cover this in a follow-up video, but miners today, they generate about 900 Bitcoin per day. That's the mining reward. And that's really nothing compared to the 50,000 Bitcoin that gets sent to exchanges every day on average, right? So it tells you that the miner pressure has become quite small in the greater scheme of things. All right, so how is this useful for you? Well, exchange flows are very useful for market sentiment analysis and to predict the short-term price movements. So for example, we see a big spike in exchange inflows that happened recently. So I've circled that in red. So let's zoom in to see exactly how that played out. Okay, so we're looking at the same chart here, but we've really zoomed in. So this is from early May here all the way to early June. So we have about a month worth of data. Again, the orange line is transfers of Bitcoin into exchanges, and in the behind here in black you have the Bitcoin price. So around this time here, this was on 10th of May, there was a lot of FUD. I can't remember if it was China FUD or Elon FUD or a combination of both, but the price dropped a lot. And what happened is that a lot of people freaked out and started getting scared. And you can see a big increase in people sending coins to exchanges. So 100,000 coins here landed into exchanges. And that's significant, right? That's twice the amount of the daily average flow. We said about 50,000 coins get sent to exchange on a daily basis. big amount of coins, and the result was that sell pressure had a big impact on price. Price continued to drop. And then here on the 18th of May, you know, a lot of people freaked out even more, seeing the price drop and drop. And we saw this big sent of Bitcoin into exchanges. 160,000 Bitcoin were sent to exchanges that day. That's huge again. That's, you know, 3 times the daily amount on average. And that was a very, that was a, you know, a lot of sell pressure here. You can see that the price continued to tank following all of that extra supply that was coming on the market. So again, a lot of sellers selling their coins, and then the price just kind of continued to plummet and plummet. So this is super interesting. If you're a trader, you would not look at this resolution one day. You would look at it hourly, or, you know, in every as small increment as possible. You would see a huge inflow of coins coming to get sold off on exchanges, and then you would obviously take whatever hedging measure is required to protect yourself for downside protection. But yeah, this is super interesting because it shows you really almost in real time the sentiment and the people freaking out, people sending their coins to exchanges to get them sold off, and really good view for overall supply dynamics. So in a similar way, we can look at outflows and study the movement of coins that are getting transferred off exchanges. So I've pulled up this chart from Glassnode, total transfer volume from exchanges. So these are people that have likely made a purchase on an exchange, and then they're now taking their coins off an exchange. And you can see that ballpark. This number hovers around 50,000 coins per day, so similar to the inflows. So just like with the inflows, well, we can see big spikes in the daily read. For example, right here, I've highlighted in red when the price crashed down to about $30,000, and a lot of people jumped on the opportunity to buy the dip. So they bought the coins on an exchange, and then they transferred their coins off the exchange. But we can really see that read quite clearly by looking at that metric. So what's also useful is to look at the net balance between the inflows and the outflows. And if you're trading with a very short time horizon, it's useful to look at inflows and outflows independently. But if you're interested in more of a medium-term outlook, then it's helpful to get to look at the net inflow view. So this is what we've pulled up here in front of us. It's called net transfer volume. It's basically the difference between net inflows, between inflows and outflows. And basically what you have here is the more red during a period of time, the more net outflows, and so the more bullish the outlook. And when you have more green during a specific amount of time, then that means there's more net inflows into exchanges, and that means the outlook is bearish. So to illustrate this, you can see that in this box in red, there's way more red than there is green. So there's more, there's net outflows from exchanges. And you can see that the price in background is going up. But then shortly after, there's a reversal in this trend. And so we see that in this green box, there's way more green than there is red, which means net inflows, which is bearish. So you can see the price in black is going down. So I want to finish this up and tie this back to a discussion we had earlier in the course where we talked about on-chain signal manipulation. So remember we showed that there was this big spike in exchange inflows, and that caused the market to tumble, and we were wondering if it was manipulation or not. So don't forget that there are many eyes looking at these flows, and really be careful not to get manipulated by what you see. You know, a whale could be making a large transfer into an exchange, basically to spook the market. That's not impossible, so, you know, stay safe out there. All right, I think time to wrap up. So I hope that was useful for you. Any questions, please ping them below, and I'll do my best to answer them as usual. Please like or subscribe if you like this type of content, and otherwise I'll see you in the next video. Bye.